And welcome. This is Mary Ellen McGonagle with your weekly MEM Edge show. This is the show where we bring you where the action is in the broader markets. Lots we are going to be covering here today. Not a great end to the week. We will get into that and a whole lot more. First up, we're going to take a look at the broader markets. Where did we close the week? All with an eye toward preparing you not only for next week, but beyond. From there, we're going to take a look at some of those top headline news that drove price action this week, and then also some bright spots in a tough market. From there, we will go ahead and look at some stocks and some telling signals that it is time to exit. And I'll share with you some examples to help guide the way there. So let's take a look at some of those headline news from last week. First up, we did see the yield on that 10-year Treasury move above 3%. The relevance there is, as stated numerous times in the past, higher yields are not good for growth stocks. So I will share a nice view of that for you and share with you what is taking shape as that 3% level was approached and moved beyond. It's one of those metrics that is widely followed, and that 3% level is as well. Another critical price point or level here was with Brent crude pricing. It rose above $100 per barrel. We'll get into that, the impact there as well, and it is related to interest rates partly. Also, commodity stocks, we did see them gain to the upside, and that is one of those bright spots. I will share that with you, as well as a couple of individual stocks that are bucking the otherwise downtrending market. Q2 GDP, we came in this week with the second estimate, and it was revised upward, and that was viewed as somewhat good news. Initially, it was down, I believe 8%, now down 0.6. So we're moving in the right direction for that GDP. We have one more estimate before that final print comes out. Today, news on Friday, Fed Chair Powell did come out and very firmly reiterate their Fed's aggressive stance as it relates to rising interest rates. They want to get back to that 2% inflation level. So that sense that they will move to any length to make that happen. And of course, the markets did sell off in response. We will get into that. So from here, let's go ahead, take a look. I'm going to share with you a daily price chart of the S&P 500. And from here, we can take a look at the price action. We are recording this just before the close on Friday, but the relevance still stands. Outside momentum indicators are now in negative territory. This is your RSI dipping down below that 50. And then if we take a look at this faster moving momentum indicator, this is your stochastics, broke below that 50, also trending downward. This is a new development. We would have to go back to this June period to see similar action on those momentum indicators, now both negative. Now let's take a look at where we closed for the week. Now, for those of you that follow my show each week, and those of you that subscribe to my MEM Edge report, will know that we've been all about paying attention to price action relative to this back and fill area in early June. This is an area that had acted as upside resistance here. A break above that was constructive. However, we were very aware and on top of paying attention to price movement relative to this 200-day simple moving average, and upside momentum was denied. We did hit resistance. And from here, we can see that we are back below this 4170 area. This is negative. So we now have 3 negative signals that are flashing. I did send out a Monday alert report to subscribers to lighten up on those tech names. This was a negative break below this previous area of upside resistance. So from here, let's take a quick look at the NASDAQ, because of that index was hit the hardest this week. And what I'm sharing with you here is a daily price chart of the NASDAQ composite. That is these candlestick formations here. And then this straight line is the yield on that 10-year Treasury. Hopefully you can see what I am pointing out here is the fact that as the yield on that 10-year rises, you will see a distinct decline in those higher growth names in the NASDAQ. So we can go back historically. This is taking us back to December of 2021 into this year. And then as the year progressed, more recently, we did see interest rates decline. This is that 10-year, and that was a period when the NASDAQ was able to rise. So here more recently, we can see the deterioration, the negative price action in the NASDAQ in line. I talked about that yield hovering now around that 3% level. So relevance is that growth stocks, again, are going to be negatively impacted by a rising interest rate environment. So let's go ahead and move on from there. We're going to take a look at those 11 underlying sectors in the S&P 500. I've gone ahead and added an RSI. That's a relative strength indicator. Sorted the list in descending order. We want to see where there may be relative outperformance, certainly compared to these weaker areas in this lower quartile here. So let's go ahead and take a look at your top performing, the only sector that was in positive territory this week, and by quite a bit, 4.8%. As this is being recorded. And we can see the nice uptick here, and this is energy, XLE. We talked about the price of oil on the rise. Energy is an area that fares well in a rising rate environment as well. So we can see this nice uptrending phase taking place. The group is finding support above this 10-day moving average. Outside momentum indicators positive. So this is one of several bright spots that I will be sharing with you as we move on. Utilities up here in the forefront, they were down less than the market, but still off by 2%. We can take a quick look at this chart and you will see this is the weekly, this is a daily price chart, but here we are with the movement throughout that week. We did get into an overbought position, pulling back, and then this MACD indicating a momentum shift. So not a lot of brightness there as it relates to underlying stocks. From here, let's take a look at materials. Now, this is an area that was very much outperforming the broader markets, but today a 3% drop in XLB, that's the ETF for basic materials. And let's go ahead and take a quick look on that weekly. So now we are down 1.2, but it is certainly lot less than we are down on the broader markets, over 3%. So this is another bright spot area that I will share some names and share with you why they are withstanding heavy downward pressure elsewhere. Let's go ahead and move down to these weaker areas. You need to be aware of them with an eye toward selling potentially your weaker names. And we can see consumer discretionary down here, technology off about 5% for the week, and then internet-related stocks. And let's just take a quick look here at this technology sector, and this is indicative of what you will see in a number of growth areas, both discretionary and technology among them. We had this nice rally. This is taking us to last week, right up or just a little above this 200-day simple moving average. Selling pressure this week, really capitulation in a way today, down 4% on technology, and we can see your momentum is now shifting to the downside. So this is what we are experiencing at this point in time, and we are going to be paying close attention to those volume characteristics as these areas come under selling pressure. This is consumer discretionary. We're not quite at the close yet, but from my work, certainly with my report over the weekend, I will be closely examining the price action, not only in these indices, but also at those underlying stocks that represent a large percentage of that sector group. Let's go ahead and move forward, because I do also want to share with you some sub-industry groupings using ETFs. And this is a great way to really stay on top of price action on the markets, see again where that potential relative outperformance is. Now, unfortunately, this week it is with that volatility. And again, those that follow this show will know that we had been really super positively surprised that the volatility index was down, languishing in this 1920 level. That is ideal for the broader markets. But one key metric when you are looking at this volatility index, also known as the fear index, is this blue 200-day simple moving average. Price action below this is constructive. However, if we move back above it, it is negative in the sense that rising volatility will often be coupled with a declining market environment. So let's just take a look. Here we are today, poised to close back above this 200-day simple moving average. And unfortunately, your momentum indicators are in positive or certainly constructive positions, really leaning us toward the real possibility that volatility could continue to increase. And again, not so good for the broader markets. Let's go ahead and move on. Take a look at some of these other areas in the stronger areas. We already talked about the yield on that 10-year treasury. Let's take a look at DBC. This is a commodity index tracking fund, an ETF, not overly dynamic, but certainly relative to what we are seeing in the broader markets. A nice dip above each of its moving averages here. Your outside momentum indicators are positive. So that is going to lead us to taking a look at a couple of names in that commodity space. Brent crude, I talked about it getting up there above that 100 level. We're now trading at 102, almost 103 per barrel. That, of course, is constructive for the growth prospects of those underlying energy stocks. So we also do, again, want to be aware of where the weakness is. And certainly within technology, we need to look no further than semiconductor stocks, SOXX. And the group is down over 4%. We did have a nice possible downtrend reversal shaping up. However, on Monday of this week, those hopes were somewhat dashed with this break below these key areas of support. And then today, semiconductors are down 6%. So we can see this outside momentum now in negative territory with this MACD crossover indicating that this uptrend from July into the end of August is certainly at the very least faltering, poised to turn negative. Let's take a look at another area of technology that is very much aligned with the group, and that is software, IGV. This is the ETF that's widely followed. And we can see a very similar dynamic where we had this downtrend reversal taking shape, and then this week, a pullback. Now, we are seemingly finding support at this 50-day simple moving average for these software stocks. However, we can see your momentum is now negative and shifting lower. We're going to share a couple of names there as well, just to give you a sense of what to be on the lookout for and what is taking place among those areas. So from here, I did want to share with you the FANG, mega cap FANG stocks. This is something I've been talking about in my report quite a bit. And that is the concept that we need these larger mega cap growth names to not only fare well, but better than the markets. These names are a proxy for growth stocks. And we can see that they are in a declining phase. So from here, I'm going to go ahead and add that RSI, share with you how we can do that. Go ahead and sort it in descending order and update it. And we're going to start with some of these weaker names just to give you a sense of really what's taking shape here. This is Alphabet, and we can see the very decisive break below this 50-day simple moving average, momentum shifting downward, now poised to turn negative, not what you want to see. We'll take a look at a couple of these other names that certainly had been holding in. Here we are with Apple, one of the really stellar names, certainly not just within FANG, but elsewhere in the broader markets. Unfortunately, today we're down almost 4%. So we can see this RSI poised to turn negative. And then we have this MACD black line down through the red, quite simply indicating that this strong uptrend is shifting. So one other stock that we can take a look at here that is representative of certainly consumer discretionary, and that is Amazon. And this is very much in line with what I shared with that XLY ETF, and we can see it traded right up to this downward trending 200-day simple moving average, and it is now faltering with its outside momentum indicators trending negative. So again, sharing this with you because these larger cap names, these growth stocks are really going to be bellwether as it relates to giving a sense of what investors are thinking relative to growth stocks. So from here, let's go ahead and take a look at some of those names that are finding support in an otherwise dismal market. And then also, I will share with you names that have broken below support so that you can be aware of what to be on the lookout for sell signals. So first up, I did mention to you that some of these basic materials types of names have held in quite well. So I am going to share with you an area where these companies have been coming in with really stellar numbers, and you're seeing a nice bullish response. These are coal stocks. Most of them are going to be smaller market cap, but they are very much in these confirmed uptrends. So a lot of these companies did report their earnings at the end of July, early August. So a couple of dynamics at play here. One is the price of coal. It's been certainly relative to historical measures, it is elevated, but also we are seeing with reduced oil, or certainly higher oil prices and reduced supply, there is a move back into coal as a resource for energy. So here we are with AREC, American Resources, nice gap up there. That was all about earnings. And you can see that it just sprung the stock up into a very confirmed uptrend. Let's take a look at another name here, a little bit larger, CIEX. This is Consol Energy, a little more orderly in its uptrend here. The stock, the company came out with earnings that were well above estimates. Estimates for this year for growth, 911% relative to last year. They did report early this month, 60% above estimates. Let's take a look at the chart here. We're in a very nice confirmed uptrend, finding support at this upward trending 10-day simple moving average. And you can go back and use historical precedent as your guide. A little bit overbought here, but certainly indicative of what we are seeing in the group. Here's one last name I'll share with you, and it is a limited partnership, ARLP, another name in a very confirmed uptrend, 6.2% yielder, and came in with stellar numbers. So that is one area of, actually, I do have one last name here, and that is BTU. It's a little bit earlier in its potential advance. You do, from my work, want to be in those names that are first out of the gate. These guys are going to be your winners and continue to advance higher normally than the broader, not just the markets, but their industry group. So one other area in that basic materials I do want to share with you, and that is steel stocks. Couple of names here, nice base breakout. I'm going to mark this up. This is STLD, Steel Dynamics, very same dynamics in play here, where they are coming out with stellar numbers. And this is all about increased demand relative to supply. So what I'm sharing with you here is a cup with handle base breakout. And this is your cup formation. The stock hits a new high in price, pulls back, and then on that right side base formation, it does not get up as high as that prior peak. It's going to be at least about a third below that prior high. From here, we do have that handle formation. In this case, the stock pulled back to its 21-day simple moving average. And then yesterday, Thursday, we did get that breakout. That is when the stock price breaks above the high point of the right side of the base. Also, what you want to see with this cup with handle base breakout is nice high volume, and we did get that. Outside momentum indicators are positive there. One other name in the steel space that we can take a quick look at here is NUE, Nucor, and somewhat similar, where we have this cup with handle poised for a breakout. So those are your basic material areas that are outperforming. I did mention to you oil. There are any number of energy, certainly these larger E&P names that are setting up quite nicely, really forming the right side of their base. This is Devon Energy, DVN, poised to break out. So certainly you can look at any number of names there. What I did want to share with you from here, again, are those names that broke above support but are faltering and falling back. And you will see certainly a number of them. You can screen for these stocks where looking for names that are trading back below key moving average. Here we are with Honeywell, HON, not picking on this stock for any reason except for the fact that it is just at that 200-day simple moving average. Take a look, your RSI dipping into negative territory, and you have that MACD crossover indicating that this upside momentum has shifted. So should we break below that 200-day, that would point to further downside because your momentum signals are negative. So I do want to share with you an example. This is DLTR, and this is all about sharing. If this occurs, it is a good time to exit. So DLTR, we can see they did. This chart looks a little funny, but it's going to tell a story here because they did come out with numbers, disappointed. The stock broke on Thursday below this 200-day simple moving average. So one of the really telling signals that a stock is under accumulation, poised for further downside, is this super high volume that took shape on Thursday. Just eyeballing this, we would really have to go back quite a bit in time to find volume of that substantialness. Also, from that, we can see the stock was unable to regain a presence back above this 200-day simple moving average, and then the stock faltered again. Of course, with the broader markets, it's down another 7%. And then we're also getting super high volume. So this is when you're looking for stocks that you own, should you stay with them? It will have everything to do with your thoughts on the broader markets, but technically from a chart standpoint, a break below key support such as the 200, really a break below that 50 is enough. If you get the super high volume characteristics and then coupled with negative momentum, very well served oftentimes to exit. So from here, I did want to take a look at a couple of other names that are experiencing somewhat deteriorating charts and just align you with what to be on the lookout for. Here we are with FAANMG, probably not the best stock to pick on because this is a basic material name, but more to the point, this is what I'm sharing with you, this concept that it just breaks just up above that 200-day and then falters to the point where it pulls back below it and your momentum indicators are negative. So we're not quite there yet with FAANMG. Maybe Nike might be a better example here. And it really is because all of your momentum here with your moving averages, they're generally trending sideways to down. So we are getting that break back below each of these moving averages today, below that 50-day with your outside momentum indicators negative. So Nike would be a better example of a name that is currently poised to trade lower. So I did also want to share another area that really did okay this week, and that is Chinese stocks. And the reason is because the US and China did reach an agreement relating to the ability to audit those Chinese listed companies that are listed in the US. So here we are with a couple of names if you are inclined to play this rally, but it's always fun to find charts that look good in an otherwise dismal market. Here we are with EDU. We can see the stock pulled back almost to that 50-day simple moving average, and then subsequently on that news is forming the right side of a base, poised to break out. We can see the momentum black line up through the red. That is constructive. And then also your RSI trending upward and in positive territory. A couple more names here. TCOM. This is a travel company, also China, from China, listed in the US. This particular stock did break out of a base with those upside momentum indicators here. And we're getting nice volume indicating that the stock is under accumulation. Last up here, VIPS. And this particular company is an online retailer. We can see that it did break out, nice volume, and then nice outside momentum indicators. Last up, I am going to end it here with a look at, and this is something certainly you can research further if you're inclined, but these are these negative. If the broader markets decline, these are ETFs that fare well and trade higher. So we're looking at QID ultra short for the NASDAQ. So we can see it's up about 8% on the day, breaking back above support, pointing this out as a possible way to hedge. However, one must be aware that they are going to tend to trade faster and higher, but also faster and lower should the NASDAQ come back into favor. But something to keep in mind. That's it for this week. Everyone have a fantastic weekend. I'll see you here next Friday.